Welcome to Explain the Charts, your go-to channel for comprehensive market insights. Today, July 28th, 2025, we're diving deep into the powerful performance of QQQ, the Nasdaq 100 ETF, providing an in-depth analysis that marries the latest market news with detailed chart patterns. The market has been absolutely buzzing recently, and the confluence of positive headlines provides a perfect backdrop for QQQ's impressive ascent. Starting with the macroeconomic landscape, recent Google searches confirm the tech-heavy Nasdaq composite just clinched its 15th record close of the year. Both the Nasdaq and the S&P 500 are concurrently hitting fresh all-time highs, a testament to robust investor confidence. This exceptional performance is largely attributed to what various reports are highlighting as a healthy plethora of earnings beats from corporate America. Furthermore, a new U.S. EU trade deal is officially kicking off a hectic week for markets, injecting even more optimism into global trade prospects. While a Nasdaq short interest report was due mid-July, its implications have likely already been factored into recent price movements, with future reports remaining key indicators. These powerful fundamental tailwinds, encompassing strong corporate health and favorable international trade relations, are creating a strongly bullish environment that propels QQQ higher. Now, let's seamlessly transition to the price action visible on the QQQ daily chart to see how this news is translating. Looking back from March 2024 to today, QQQ has undeniably been locked in a sustained and robust uptrend, consistently establishing a clear sequence of higher highs and higher lows. Notice the significant, albeit temporary, pullbacks observed in April 2024, late July 2024, and the more recent sharp drops experienced in February and early April 2025. These corrections, despite their steepness and the high volume often accompanying them, were consistently met with aggressive buying interest. This rapid absorption of selling pressure demonstrates profound underlying demand and effectively reinforces the overall bullish sentiment that pervades the market for tech. For instance, the particularly sharp dip to around 402 in early April 2025 was swiftly and powerfully reversed, showcasing immense market strength and resilience. The current price, sitting at 566.37 from Friday's close, marks a fresh all-time high, serving as a powerful testament to the persistent upward momentum. From a purely technical perspective, with QQQ reaching new heights, immediate resistance above us is, by definition, uncharted territory. Therefore, our focus shifts to identifying crucial support levels, which are typically previous resistance zones that now act as floors for price. The 540 to 545 region, which previously functioned as a major resistance zone in late 2024 and early 2025, has now firmly established itself as a critical long-term support level after being decisively broken to the upside. This level is immensely significant. A sustained close below it on the daily chart would signal a material shift in the broader daily trend, warranting caution. For shorter-term trading, immediate support can be observed around the 560 level, derived from recent consolidation patterns and prior minor highs, offering a potential bounce point. This strong and consistent bullish trend on the daily chart aligns perfectly with the positive news of earnings beats and the new trade deal, strongly suggesting that market participants are actively pricing in this favorable information. Shifting our focus to the one-hour chart allows us to examine the shorter-term dynamics, specifically for the period from July 7th to July 15th, 2025. The strong upward movement we discussed earlier, significantly fueled by the news of record closes, is clearly visible here on July 9th, where QQQ experienced a notable price jump from approximately 553 to over 557. Following this initial surge, price entered a period of healthy consolidation, trading primarily within the 554 to 556 range, suggesting a temporary equilibrium between buyers and sellers. However, the subsequent decisive breakout above the 557 level on July 14th demonstrates renewed and strong short-term bullish control, resuming the upward trajectory. Crucially, volume during these upward pushes on the hourly chart has been consistently strong, lending significant credibility and conviction to the price advancements. This hourly time frame effectively illustrates how positive daily sentiment translates into sustained incremental gains throughout various trading sessions, absorbing minor pullbacks. For the most granular perspective on recent intraday movements, let's hone in on the 15-minute chart, specifically from July 24, 1811 Universal Time Coordinated to July 24, 2226 Universal Time Coordinated. Within this window, we observe subtle but important intraday volatility, highlighted by a notable bearish candle on July 24 at 1941 Universal Time Coordinated, which occurred with higher-than-average volume. This sharp, albeit brief, sell-off indicates some short-term profit-taking or a momentary increase in bearish pressure, but it was not sustained. Crucially, the swift and immediate recovery in the subsequent 15-minute candles, notably forming an engulfing bullish pattern, powerfully highlights the underlying strength and resilience of buyers. This immediate absorption of selling pressure suggests that even minor dips are currently being viewed as opportune buying opportunities by eager market participants. The very short-term trend on this time frame is still decidedly pointed higher, with QQQ consolidating slightly just below its absolute all-time closing high from Friday. This resilience at lower time frames underpins the broader bullish outlook. So, based on both the fundamental news and technical analysis, what are the primary reasons to maintain a bullish or adopt a bearish stance on QQQ at this pivotal juncture? On the unequivocally bullish side, the powerful confluence of robust corporate earnings, the newly announced favorable U.S EU trade deal, and the consistent formation of new all-time highs strongly suggests continued upward momentum. The technical analysis, with its clear and persistent uptrend, successful retests of critical support levels, and immediate buying on all significant dips, further solidifies this compelling bullish case. Conversely, reasons to exercise caution or even adopt a short-term bearish stance primarily stem from the potential for significant profit-taking after such a prolonged and steep rally, especially as retail investors may lock in gains. Unexpected shifts in critical global economic data, such as hotter-than-expected inflation reports or a sudden hawkish pivot in central bank policy, could swiftly trigger a sharp correction across the market. Technically, a sustained break and close below key established support levels on the daily chart would unequivocally shift the short-term bias to bearish, inviting more aggressive selling pressure. Furthermore, the current elevated valuations prevalent within the tech sector may also render QQQ more susceptible to sudden downturns if future growth expectations are not decisively met or even slightly disappointed. When strategically considering trading QQQ, several key price levels demand close attention for both entry and exit points. The all-time high of 566.37 is the immediate and most obvious level to watch. A decisive break and subsequent hold above this mark on significant volume would powerfully confirm continued upward strength. On the downside, the 560 level serves as the very first line of short-term support, presenting a tangible potential bounce point for day traders and those looking for quick entries. A more significant and structurally important support zone for both short and medium-term trades is the 550 to 552 region, which has demonstrated its resilience as a strong prior pivot. For long-term investors patiently awaiting deeper pullbacks, the 540 to 545 range represents a very robust and foundational support, often coinciding with longer-term moving averages. Volume analysis remains absolutely critical. Consistently strong volume accompanying upward price movements confirms powerful conviction among buyers, indicating genuine accumulation. Conversely, high volume on bearish candles that ultimately fail to sustain decline suggests that buying interest is actively absorbing selling pressure, a bullish sign. Traders should also meticulously monitor the daily close relative to these outlined levels, as strong closes above support or weak closes below indicate prevailing directional bias and strength. The broader market sentiment, particularly as new earnings reports from major tech components are released, will continue to heavily influence these price movements. To summarize our comprehensive analysis, QQQ currently resides in a powerful and well-established long-term uptrend, significantly bolstered by a recent string of highly positive news. Key support levels for traders and investors to diligently monitor include the immediate 560 level, the more substantial 550 to 552 zone, and the critical foundational 540 to 545 range. Our unbiased prediction, supported by current market dynamics, suggests a high likelihood, approximately 70 to 75%, for QQQ to continue its impressive upward trajectory and establish even newer all-time highs in the near to medium term. This optimistic outlook would be further and strongly reinforced by sustained positive tech earnings, a stable global economic outlook, and continued progress on international trade agreements. However, there remains a moderate likelihood, approximately 25 to 30%, of a healthy and natural short-term pullback to retest the 560 or 550 levels, which would be viewed as strategic buying opportunities for long-term positions rather than a bearish reversal. Looking ahead, keep a close watch on future inflation reports and any subtle shifts in central bank rhetoric, as these macroeconomic factors possess the power to be significant catalysts for market-wide reevaluations. Additionally, be attentive to the next Nasdaq short interest position report and any further corporate dividend announcements, as these can provide valuable additional context for market participants. Thank you for tuning into Explain the Charts, and always remember that market analysis is a dynamic process requiring continuous learning and diligent risk management. Happy trading!